Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Allegion Plc annual report. Allegion Plc offers a wide range of security products and solutions to customers worldwide. At the core of its offerings are door controls, doors, glass and door systems, electronic security products, locks, and key systems. These include various types of locks, lock sets, portable locks, and key systems from brands such as CISA, Interflex, LCN, Schlage, Simons Voss, and Von Duprin. In addition to its product offerings, Allegion provides a range of services and software solutions. This includes inspection, maintenance, and repair services for automatic entrance solutions, as well as software as a service, SaaS solutions such as access control, platform integration, and workforce management. The company also offers ongoing aftermarket services, design and installation offerings, and locksmith services. Allegion sells its products and solutions to end users in various markets, including commercial, institutional, and residential facilities. These markets include education, healthcare, government, hospitality, retail, commercial office, and single and multifamily residential sectors. The company reaches these customers through multiple channels, including specialty distribution, e-commerce, wholesalers, do-it-yourself home improvement centers, online platforms, and small specialty showroom outlets. Allegion PLC's stock price has seen a significant surge in the past year, increasing by over 30.22%. Several key news events have contributed to this growth, starting with the company's strong fourth quarter and full year 2025 financial results. Allegion reported record-breaking earnings, surpassing analyst estimates, with an adjusted EPS of $8.14 for 2025. The company also maintained robust operating margins between 23–25% and saw a significant increase in total revenue to $4.07 billion. In addition to its strong financial performance, Allegion provided a surprisingly robust guidance outlook for the 2026 fiscal year, forecasting an adjusted EPS of $8.70 to $8.90, which exceeded Wall Street's consensus. The company also increased its quarterly dividend by 8%, marking its 12th consecutive year of dividend growth. This move demonstrated Allegion's strong cash generation and commitment to returning value to shareholders. Furthermore, Allegion has strategically positioned itself as a leader in seamless access by integrating physical security with digital infrastructure. The company's emphasis on expanding its electronic security solutions portfolio proved fruitful, with the electronics segment reporting low double-digit organic growth in Q4 2025. Future growth prospects are also bolstered by an active mergers and acquisitions (M&A) pipeline, with $685 million in available cash flow designated for acquisitions in the electronics and software sectors. Overall, Allegion PLC's stock price increase can be attributed to a combination of strong financial performance, strategic growth, and positive future outlook. The company's ability to deliver record-breaking earnings, maintain robust operating margins, and provide a surprisingly robust guidance outlook has contributed to its significant growth over the past year. Allegion PLC market capitalization of $14 billion is significantly larger than the average industry peer of roughly $1 billion. This shows that Allegion Plc holds a significant advantage in their industry. Allegion Plc trades at a higher price-to-earnings ratio of 22 times and a higher price-to-book ratio of 6.77 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The leverage on the balance sheet appears elevated, with liabilities of 67% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have increased over the past 5 years, which is normal for a growing company. Asset and equity growth have outpaced liabilities, suggesting balanced and healthy expansion. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The company has consistently reduced its share count, while revenue and equity have grown, indicating disciplined buybacks that enhance long-term per-share value. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline are multifaceted and influenced by various factors. On the growth side, favorable pricing, volume growth, and acquisitions have been key contributors to revenue expansion. The demand for electronic security products has also emerged as a strong and long-term growth driver. In specific regions, such as Allegion Americas, pricing, volume, and acquisitions have driven growth. On the other hand, revenue decline is often attributed to external factors like slow demand for new construction or remodeling projects, global macroeconomic challenges, and negative macroeconomic trends. Currency exchange rate fluctuations, tariffs, and market risks also pose significant threats to revenue growth. Internal factors such as increased competition from technological developments and private label brands, failure to develop new products and services, and changes in customer preferences can also lead to revenue decline. Furthermore, companies may experience revenue decline due to reputational harm, product defects or quality issues, and divergence from core business. Investment in startup companies and development stage technology, as well as enterprise excellence efforts and significant capital expenditure projects, can also divert resources away from core operations and contribute to revenue decline. Net income and profit margins experienced significant changes between 2024 and 2025. In 2024, net income declined due to reduced demand for products and solutions, increased costs caused by inflation, tariffs, and supply chain disruptions. However, in 2025, net income increased by $108.8 million, primarily driven by higher net earnings. The profit margins also showed improvement. The operating margin rose from 20.7% in 2024 to 21.1% in 2025. Additionally, segment operating margins for Allegion Americas and International increased from 27.1% to 27.9% and 8.7% to 9%, respectively. The reasons behind these changes can be attributed to favorable volume/product mix, pricing, and productivity improvements that exceeded inflation and investment spending. Furthermore, the company benefited from acquisitions/divestitures and foreign currency exchange rate movements, which had a positive impact on its financial performance. The company's financial performance indicates a significant improvement in its ability to generate cash from its core operations. As evident from the data, the net cash provided by operating activities increased substantially from $675 million in 2024 to $783.8 million in 2025. This upward trend is a clear indication that the company is generating positive operating cash flow. The operating cash flow status report also confirms this, stating that the company's operating cash flow is indeed positive. Furthermore, the company's ability to service its debt and generate positive operating cash flow simultaneously demonstrates its financial stability and resilience. Overall, these indicators suggest that the company is on a solid footing in terms of its cash generation capabilities. The company's debt level has shown minimal fluctuations over the past year. Initially, an unsecured revolving credit facility increased from $750 million to $1 billion in 2025, indicating a slight expansion of available funds. However, this was offset by a decrease in total debt and long-term debt and other borrowings, which decreased from $1,999.5 million in 2024 to $1,980.1 million in 2025. Regarding interest expenses, there are mixed signals. On one hand, potential future changes to fiscal and monetary policy, trade policy, and interest rates may lead to an increase in interest expenses. Additionally, variable interest rates on outstanding debt and potential future borrowings under the revolving facility could also contribute to higher costs. However, actual interest expenses decreased from $102 million in 2024 to $101 million in 2025, indicating a minor reduction of $1 million. The performance of Allegion's various segments and regions has been a mixed bag. On the positive side, Allegion Americas has seen significant growth, with net revenues increasing by 6.9% to $3,218.8 million, and segment operating income rising by 9.8% to $896.5 million. This region also boasts an impressive segment operating margin of 27.9%. Similarly, Allegion International has performed well, with an 11.7% increase in net revenues to $848.5 million and a 15.4% rise in segment operating income to $76.5 million. While these regions have shown strong growth, it's worth noting that the global market is facing some challenges. Macroeconomic conditions remain mixed in international markets, and tariff/trade restrictions are affecting various regions. However, despite these headwinds, Allegion Americas and International have managed to deliver impressive results, indicating a resilience in their operations. The company has made significant investments through acquisitions in recent years. One notable example is the acquisition of ELATEC on July 1, 2025, for a total consideration of $631.6 million in 2025 and $147.2 million in 2024. This acquisition included Allegion GmbH and other group entities. The businesses acquired have generated $93 million in net revenues since the acquisition dates. In terms of divestitures, there is no clear indication of any specific transactions mentioned in the provided text. However, it does mention that Allegion International experienced an 8.2% increase in net revenues, but this figure does not represent a divestiture and lacks a specific dollar amount. The company's financial activities have been notable in recent years. One significant development is the payment of dividends to its shareholders. In 2025, a substantial amount of $175.3 million was distributed as dividends. This demonstrates the company's commitment to rewarding its investors and sharing its profits with them. In addition to paying dividends, the company has also engaged in share buybacks. During this period, approximately 0.6 million shares were repurchased for a total cost of $80 million. This strategic move is aimed at reducing the number of outstanding shares, thereby increasing the value of each remaining share and benefiting existing shareholders. There are concerns about inventory buildup and supply chain disruption due to various factors. Global macroeconomic challenges, such as material, electronic component, and labor shortages, have the potential to disrupt supply chains. Additionally, unexpected events like global climate change can also cause disruptions in operations and negatively impact businesses, leading to supply chain issues. Furthermore, the possibility of disruptions in the global supply chain may have a negative impact on business. These concerns highlight the need for companies to be prepared for potential disruptions and have contingency plans in place to mitigate their effects. That concludes the financial summary for Allegion plc. Feel free to comment below, and I will be happy to answer them when possible.